Hello friends, if you do trading, then this video is going to be a game changer for you. Because the biggest problem for a trader is this: sometimes there is profit, sometimes there is loss, but why is there no consistent growth? Do you think the same way? Then wait, because today I am going to share 6 such tricks with you that will give a new direction to your trading. These tricks will not only give you the strength to survive in the market, but will also gradually help you achieve consistent growth. And friends, the most special thing about these tricks is that they are not based only on technical charts or strategies, but on your trading psychology. As Mark Douglas says, in the market, anything can happen, but consistent winners are those who learn to control their mind and emotions. So if you also want your trading journey to move from losses and struggle toward consistent profit, then watch this video till the end, because here we will not just talk, but understand step by step how you can build stable growth in your trading. So friends, without wasting time, let's begin and learn the first secret that gives consistent growth in trading. The biggest misconception in trading is that we try to defeat the market. People think that if they find the right strategy, the perfect indicator, or a system that gives correct buy and sell signals every time, then they will become rich. But the truth is that the market will never move according to us. The market will always remain unpredictable. You must remember what Mark Douglas says: in the market, anything can happen. No matter how much experience you have, no matter how big an expert you are, no one can confirm in which direction the next candle will go. The lesson from this is that for consistent growth, we should not waste our energy in the wrong place. Most people focus entirely on understanding or controlling the market. But real growth comes when you learn to control yourself. Controlling the market is impossible, but controlling your thought process, emotions, and actions is completely possible. The real trading journey starts from there. Think about it: whenever you take a loss, where does the real frustration come from? From thinking that the market went against your prediction. But if you already accept that the market can go anywhere at any time and your job is only to manage your risk, then that frustration will reduce by 80%. Mark Douglas says that successful traders do not try to predict the market. They know that every trade is just a probability, not a certainty. You may have an edge, but not a guarantee. Growth begins with this mindset. Imagine you take 100 trades in the market. Out of them, 40 end in loss and 60 end in profit. If you controlled risk every time and followed your plan with discipline, then even if you lost 40 times, overall you would still be in profit. The problem starts when we look for certainty in every trade. As soon as a trade goes into loss, we get angry, change strategies, or start revenge trading, and from there the account slowly starts getting destroyed. The first step toward consistent growth is to train your mind. Stop trying to control the market and start controlling yourself. Discipline and patience are your biggest weapons here. This may sound simple, but it is the most difficult part because the market works against our psychology. We think we will defeat the market at any cost. But the truth is that every trader who fights the market eventually loses, and the one who accepts the market is the one whose growth begins. So you must understand that trading is not just a game of charts or indicators, it is a mental game. And to win this mental game, you must master yourself. Now that we understand the market cannot be controlled, and the real control is over ourselves, the next question is, what should be the first practical step? And here comes the biggest step: risk management. Most traders fail because they put too much capital into a single trade, sometimes 20%, sometimes 50%. And when that trade goes against them, their entire account shakes. Mark Douglas clearly said, "Your edge is nothing without risk control." Even if you have the best strategy in the world, without managing risk, it will not work for you in the long run. Think deeply about this. Suppose your trading account is 100,000. If you risk a big amount every time and one big loss happens, your confidence will break. But if you make a rule to risk only 1% or 2% per trade, then even if you face 5 consecutive losses, your capital will remain safe and you will still be able to think calmly and take the next trades. Risk management does not mean just placing a stop loss, it means predefined risk every time. If you decide that you will not lose more than 2% on any trade, then no matter how perfect the trade looks, position sizing must be according to that rule. This builds consistency, and consistency brings growth. Growth does not come from one big profit, but from small controlled profits and manageable losses. Another big mistake traders make is thinking that 1 or 2 big profits will double their capital quickly. But real traders, as Mark Douglas says, think in probabilities, not in certainties. They know there will be losses and there will be profits. But if risk is fixed, the outcome will always be in their favor over time. Trading should be seen as a long-term business. Just like running a shop, you don't make profit every day. Sometimes there are losses, but you move forward by looking at the yearly result. Similarly, a trader should not get emotionally attached to the outcome of a single trade. Fix the risk and focus on long-term growth. Risk management also reduces emotional pressure. If you put half your capital in one trade, every candle will scare you. But if risk is only 1% or 2%, you can calmly watch the trade and make better decisions. As Mark Douglas said, the best traders are not afraid to lose because they know how much they can afford to lose. Even after managing risk, many traders fail because of mindset. Most people treat trading as a short-term profit machine. They want profit today, big money today. But trading is not about short-term profit, it is about long-term consistency. Short-term thinking disturbs decision, making quick profit booking due to fear and holding losses due to hope. Real money in trading is made slowly with discipline. Think of going to the gym. Do you expect a body in 7 days? No. Muscles take months and years to grow. Trading is the same. If you take small disciplined steps daily, your account will grow gradually. As Mark Douglas wrote, consistency is a mindset, not a strategy. Losses are part of the game, and every loss prepares you for the next win. To develop a long-term mindset, stop seeing every trade as a separate win or loss. See them as a series. Over 100 trades, if you follow the process, you will be profitable. This thinking removes emotional attachment to single trades. Patience plays the biggest role here. The faster you try to make money, the more the market tests you. But once you focus on long-term growth, your journey becomes stable and successful. The next powerful tool is a trading journal. Many traders ignore it, but winners are not afraid of mistakes, they learn from them. A trading journal is not just writing trades, it includes reasons for entry, exit, and emotional state. This helps you identify repeated mistakes and effective strategies. Trading is about mastering yourself, not the market, and a journal is the biggest tool for that. Emotions and discipline are the next challenge. Fear and greed destroy accounts. Successful traders have no emotional attachment to outcomes. Discipline means separating decision making from emotions and following a predefined process. Journaling helps track emotional reactions and build discipline. Confidence and continuous practice are equally important. Confidence does not mean expecting profit every time. It means trusting your process. Confidence comes from consistency, not luck. Continuous practice builds skill, reduces mistakes, and increases self-reliance. When mindset is strong, risk is managed, journaling is done, emotions are controlled, and practice is consistent, natural consistency and growth appear. This is what Mark Douglas calls trading in the zone, stress-free, disciplined, and profitable trading. Finally, integrate all these lessons into daily practice. Knowledge without execution is useless. Growth means your account's long-term trend moves upward, not that every trade is profitable. Trading is a marathon, not a sprint. So friends, if you seriously adopt these 6 tricks, mindset control, risk management, long-term thinking, trading journal, emotional control, and continuous practice, no market condition can stop your growth. If you learned something from this video, like it, comment which trick you will apply first, share it with your trading friends, and don't forget to subscribe. Remember, real winners in trading are those who master their mind and process, not just charts and indicators. As Mark Douglas says, success in trading is about managing yourself more than managing the market. Now friends, after understanding mindset, risk management, long-term thinking, journaling, emotional control, and continuous practice, it is very important to talk about something that most traders completely ignore: self-awareness in trading. Many traders believe their problem is the market, the broker, or the strategy. But in reality, the biggest problem is that they do not truly understand themselves. Trading is the only profession where your weaknesses are exposed every single day. If you are impatient, trading will punish you. If you are greedy, trading will magnify it. If you are fearful, trading will exploit it. Mark Douglas explains that the market is a mirror. It reflects exactly who you are inside. That is why 2 traders using the same strategy can get completely different results. One grows consistently while the other keeps blowing accounts. The difference is not the strategy, the difference is self-control and awareness. You must start asking yourself deeper questions after every trade. Why did I really take this trade? Was I calm? Or was I emotionally charged? Did I follow my plan, or did I chase the market? When you become honest with yourself, growth begins automatically. Trading rewards honesty and discipline, and it punishes ego and impatience. This is why professional traders focus more on process improvement rather than profit chasing. Now let's talk about expectations, because unrealistic expectations destroy more traders than bad strategies. Many traders enter the market thinking they will double their account every month. This mindset is extremely dangerous. When expectations are unrealistic, frustration increases, discipline decreases, and emotional trading takes over. Professional traders understand one simple truth: the market does not owe you anything. You are not entitled to profit just because you studied, watched videos, or spent time on charts. The market rewards only those who execute correctly over a long period of time. Once you accept this truth, pressure disappears and clarity improves. Another powerful concept you must understand is detachment from money. As long as you see trading only as money, fear and greed will control you. But when you start seeing trading as a skill, a business, and a probability game, emotions slowly lose their power. This does not mean money is not important. It means money should be a result, not the focus. The moment money becomes the main focus, your decision-making quality drops. Professional traders focus on execution quality. Money follows automatically. Now let's discuss loss acceptance, one of the hardest lessons in trading. Most traders say they accept losses, but emotionally they don't. The moment a stop loss is hit, frustration, anger, and self-doubt appear. This reaction shows that the loss was never truly accepted. Mark Douglas teaches that a loss should feel normal, not emotional. A loss is simply the cost of doing business. Just like a shop owner pays rent and electricity bills, a trader pays losses to stay in the game. When you accept losses fully, revenge trading disappears, overtrading disappears, and clarity returns. Another key factor in consistent growth is routine and structure. Random trading creates random results. Professional traders operate with routines. They have fixed market hours, predefined setups, clear rules, and review sessions. This structure keeps emotions under control and improves consistency. If you wake up every day without a plan and start trading based on impulses, the market will quickly humble you. But when you approach trading with structure and preparation, confidence increases naturally. Let's also talk about overconfidence, because it is just as dangerous as fear. After a few winning trades, many traders start increasing risk, breaking rules, and thinking they have mastered the market. This is one of the fastest ways to give profits back. True confidence is quiet. It does not rush. It does not overtrade. It respects risk. Professional confidence comes from repetition and discipline, not from a few lucky wins. Consistency is built when you treat every trade the same way, whether it is a win or a loss. The market does not care about your previous trade. Every trade is independent. Once you truly understand this, emotional attachment disappears. Now understand this very clearly. You do not need to trade every day to grow. Many traders think more trades mean more profit. In reality, more trades often mean more mistakes. Quality always beats quantity. Professional traders wait patiently for high probability setups. They know that sitting on hands is also a position. Patience is not doing nothing. Patience is waiting for alignment. When strategy, risk mindset, and market conditions align, execution becomes smooth and stress-free. That is the state where consistent traders operate. One more powerful habit that separates amateurs from professionals is reviewing performance without emotion. Instead of blaming the market, professionals ask, did I follow my rules? Did I respect my risk? Did I execute correctly? If the answer is yes, then the trade was successful even if it was a loss. This mindset completely changes how you experience trading. Losses stop hurting, and learning accelerates. Finally, understand this: trading mastery is not achieved in weeks or months. It is built slowly, layer by layer. Every disciplined trade strengthens your mindset. Every controlled loss increases maturity. Every journal entry improves awareness. When all these elements come together, mindset, risk control, patience, journaling, emotional discipline, and continuous improvement, trading stops feeling chaotic. It becomes calm, structured, and predictable. This is exactly what Mark Douglas meant by trading in the zone. A state where fear is gone, greed is controlled, and execution is effortless. So friends, stop searching for the perfect indicator or secret strategy. The real edge is you. Master your mind, respect risk, trust the process, and stay patient. If you do this consistently, growth is not optional, it becomes inevitable.